Everybody ready? We do have the microphones here.
Hello, hello.
Yeah, everything's working all right. Well, first of all, thank you to the audience for making it to this panel. We will try to make it a lasting one and a fun one. So we already agreed that we will be respectfully disagreeing while going over in this panel. So please, guys, interrupt yourself. And let's start and kick this off with a little bit of an introduction round, who you are and what the fund or your project, what you're doing, and what you're most looking forward to speaking about in the next, let's say, 30 minutes. And start with you.
Thank you. My name is Jesus Lander. I used to be a director in Barclays, and right now we have built a project where we tokenize hedge funds. Over my career, I've spent a lot of time with family offices, hedge funds, VC funds on my career, and that's why I'm in the panel. I'm also going to speak from the perspective of a project that is racing right now. So looking forward to discussing the challenges that projects have during this new cycle.
Perfect. So that means that you actually have to deal with guys like the one sitting on the left of you, right?
With all of them, yes. And many more. Yeah. Hundreds of more.
Hundreds more? OK.
Plenty.
So take it away.
We're all the same. It's very hard to tell us apart. It's OK. We are last, but I feel like that's being first in reverse, you know? So it's, I enjoy that. It's going to be a tough crowd, because I'm going to keep going with the bad jokes. My name's Lex. I'm a co-founder of Generative Ventures. Generative Ventures is a early-stage venture fund focused on the intersection of crypto, fintech, and AI. We like to think about it as the machine economy. Also, we like to think about it as robot money. Robots are people too, just like corporations, and they need money as well. That's horrible. It's like 0 out of 3 jokes have landed so far. I feel like everybody's really... If you're tired, raise your hand. OK. If you raise your hand, you're not that tired, because you had the energy to do it. Previously, I was at Consensus for about 4 years, where I ran the DeFi and fintech products and was the CMO and chief economist. And I started out as an entrepreneur back in the 2010s, building out a robo-advisor in New York. And so I feel like my entire life is this dystopian sequence of building various robots for money. And now everything that we see is money for robots and robots for money. So I'm excited to talk about that if you haven't noticed.
Well, thanks for that. By the way, we lost Jingwei Li on the way. He actually got his bag stolen, and he's still searching for that in Barcelona. So he's not joining us. Now moving over.
Hello, everyone. My name is Sagar Barvaliya. I'm a GP and co-founder at Blockchain Founders Capital. We are based in Germany. It's a German fund, but we invest globally. You can see like it's a Blockchain Founders Capital, but we invest in the intersection of Web 2 and Web 3 is like Web 2.5. So we're investing in the next generation of internet companies. We highly focus on migrant. I myself come from India 15 years ago in Germany. So we are really bullish on migrant founders. We invest 300,000 euro ticket size. We do like pre-seed seed. We have 22 investments, 70% in Valley, 30% in Europe. So reach out. Before I hand over to my colleague, I would like to ask, please raise your hand. Who are new to the crypto? Who doesn't own crypto? Wow. So it's like a...
Don't do it. You still have time. Leave now.
Yeah. And please raise your hand if you are holding Bitcoin. OK. One more question. How many of you have actually used the MetaMask and interacted with DeFi protocols like you use OK. One more thing I would like to add is also I think I'm also co-founder of ETH Munich. We try to educate so many people, but I think we talk too much about education. I think you don't need to educate people. When WhatsApp and Uber came, you just need to throw the application and they will start using. And that's same will happen in crypto and AI and everything. Yeah, we have a lot to talk, right?
Don't buy crypto and learn nothing.
Hi, guys. My name's Chris. I'm the founding partner of Equilibrium Ventures. Equilibrium Ventures has about 65 blockchain engineers in-house. So our background is we actually helped build the first version of Starknet, helped build the first version of Aleo, Celestia, ZK Sync, Aptos, Ethereum, Polygon, Solana, Ripple, Polkadot, Algorand, pretty much anybody that you can name on the L1, L2 side, we actually help write their code. And so we started as an engineering firm, was investing off the balance sheet. The balance sheet accidentally ended up doing very well. And so we wanted to start the fund to kind of bring everything back to tech a little bit. So we're probably one of the few funds that can actually do tech DD, like read through your GitHub repo. And then also if we invest, you have 65 engineers that can actually help you ship code, like build your product, scale operations, etc. Yeah.
So basically what you were saying is that you actually understand in what the hell you're investing in, right? When you have all the blockchain engineers sitting in your own company, right?
Yeah, I mean, hopefully we all do. Not just me, but
Yeah. Let me stay with you, Christopher, to kick this off with the first question. So what do you think, how would success look like for VC in 2026? And are you aiming more for token returns, adoption, exits, something else entirely? What has to happen in 2026 to move this thing actually really forward? Because we were just discussing, we are hearing like when you're in the game for a little while, you hear the same things all over and over and over again. But what is the stuff that really matters?
Yeah, so I think at this point, like we've had probably about like 10 years of a playground within the crypto market where kind of you could raise a bunch of money on like a PowerPoint and a dream and then launch your token and everybody would kind of speculate on like if your tech was actually good or if it actually had any end use case. So as of right now, like our investment strategy has pretty much been, or our engineering side too, like we help research a lot of good technical concepts, but a lot of them at the end of the day actually don't have any end use case. And so they end up just being like a research project that actually has no real world value. And so a lot of our investment has actually shifted towards like, if you have a real product and like not only is it good tech, does it actually have like a clear path towards revenue? And so far, I think the portfolio has done quite well because I think the crypto market and people that are investing in the industry is now realizing, you know, we actually have to build real businesses and like products that have real users. And that's kind of our forte since we take technical concepts and actually build products out of them. So, yeah.
So that means no investment into meme coins in your funds, right?
I don't know how you would do tech DD on a meme coin, so that's, yeah, out of scope.
Yeah, I heard something just like that from Sagar. So can you tell me a little bit more about the recent investments that you guys did and specifically why you chose that?
So I mean, this year we did like 7 already. And so our bet is on blockchain and AI as an emerging tech, but let me ask the question to audience because I think I don't want to bore you guys. Look, how many of you really understand the tech behind Facebook, Uber, and WhatsApp? Raise your hand. Like less than 1%, right? So our investment thesis is a bit different than like rather than investing in DeFi protocols or investing in L1s or a couple of different you know, DeFi stuff where you are providing liquidity and all. So our recent investment involves like, one of the investment is like, they might use blockchain in 3 years down the road after hitting the product market fit. It's called AppStack. The guy was working for one of the largest advertising company in Valley. And so basically, probably you doesn't know, like when you use the Facebook and you click on some advertisement, right, and you end up downloading the application, Facebook exactly knows that you click that link, you went to the App Store or Android Store, and you download that application, right? And Apple get to know a couple of years back, and they turn off that switch which was tracking the user behavior. So recent investment is the AppStack, which is the last second one, where these guys come up with the solution where you don't need to, like how mobile app makes more money, right? Rather than going to the Facebook and paying these all advertising mafias by using the AI tech. That's one of the investments. Second investment we did is in UK. The guy is just barely 19-year-old kid. He's coming from YC. He built like auditing agents. How it works, like, so, okay, you go to like big 4 companies for auditing, right? They are like very expensive. I come from Germany, so I mean, you talk about Wirecard, then you can see like, oh, E and Y, whether you trust them or not, I have nothing against them, I'm not biased there. So basically these big four are like really expensive, they take lots of time to do auditing, and then you can still can't trust, from the historical results. This guy goes to like $1 billion, $2 billion companies and tell him like, or telling the CFO of the company like, hey, I have built the AI agent, which gives you 10x faster and cheaper auditing than you're using these big four people, right? So that guy is basically like 20-year-old, he's like making $500,000 revenue. He convinced like DoorDash and kind of the businesses which are already valued at $5 or $7 billion. So this kind of founders we are investing there, where like they might use blockchain to track the auditing in next 3 years, but we are investing in companies which makes the revenue, even they are making $20 revenue, that should not come from token or any kind of like KOL activities, or the launching some random token and creating the fake liquidities. They should come from like real businesses. So we invest in real businesses which might solve the problem 10x faster and cheaper. Of course, there is a market risk. We might lose the investment as well. But our focus is like, you build the product, you use the tech, you don't talk about tech, let the user use your product and keep coming back to you. They would like to pay you basically to use your product, and then after 3 or 5 years later, they have the huge community, they might do the token.
Yeah. All right. So got it. So it's like real problem, real use case, and basically not try to sell me an idea, but try to sell me the like complete solution, and basically have some revenue in the best case. I want to go to Jesus now, or to Jesus now. Can you tell me, because you're like right here in the stage now as a project, dealing with these guys. So what is it that you are specifically differentiating, and why do they want to invest in you? And do they more look like into an equity investment, or is that a token investment, if at all?
Pitch moment then, thank you. No, so yeah, just to give you a bit of background, right? So I'm coming from traditional finance, and I've seen already a few cycles, right? Especially dealing with family offices, VCs, across private credit mainly. So something that I've seen right now is, as Sagar was saying, we are in a moment where you don't care about what infrastructure you're running on. What you care about is what I can do with infrastructure. So I'm seeing more traction on projects that get invested because they're building applications that abstract complexities. In our case, for example, we have right now a product market fit with 20+ hedge funds because we abstract from them the complexities of tokenizing their funds and distributing them to channels in Web3 and Web2, and for them to raise more money. So I go to hedge funds and say, hey, I can make it easy for you to raise money. They don't care how they do it. Well, of course, they care certain legal and compliance issues, but abstracting that, they don't care the technology. As long as I can deliver on them raising more AUM, they're in. And same on the side of the users and investors that invest in our tokenized strategies. They, at the end of the day, they don't care much about these days in what blockchain I'm investing, of even long Solana, short Solana. What they care more about is how much money I can make here versus on equities, versus in commodities. So we are now abstracting away the complexities of blockchain and simplifying the message so we can be attractive not only to crypto VCs, but also as institutions are here and retail and crypto is that, we are in a new game where we have now a lot of traction with traditional VCs. VCs that before, they were not that as active on the blockchain. But right now, as our clients are institutions, are users on traditional finance, retail and institutional, then we getting more traction by from also those VCs. So and these VCs want equity. So right now for the rounds, we're doing equity with token warrants, and we are not seeing much actually activity from token VCs, because these VCs, I'm not seeing them deploying, but I'm seeing the equity VCs from the traditional finance deploying and with a lot of FOMO on investing in blockchain projects.
I would like to add a small note here. So I'm not against the token model. I'm wearing a channeling socks, so I can be the degen as much as you are the degen, okay? So you have to understand the ICO era concept. The whole idea of doing the ICO and token was to raise the capital from the retail who cannot get access to this deal flow, because financial world is like very closed door community. If you are a guy with $5,000, you cannot invest in a value-based project or some of the best projects, right? There was not a case in Facebook, Uber, or Google came out. But now it's the case. So the whole idea behind ICO is like, okay, you become part of that, crowdfunding round where this guy is going to build the next generation of companies. So you can prove your ownership by token that, hey, I'm also part of that investment round, and I can also get financial gains. On top of that, you are also like emotionally involved because you like to use their product. But what happened, like as a human nature, we are like a greedy bastards. We like to misuse every concept more than we like to use it on proper way. So this all founders started raising token money because it looks like more easy exit before building the product and having the product market fit. So if you look at the token as like a ownership on blockchain, it's the same like a stock. The people who build like a Microsoft, Google, they did the IPO after finding the product market fit to raise more money, right? And they can scale it more in the different continents, and then people can own the stocks. But what happened in crypto is like basically the founder who just raised $2 million, he's constantly chasing this vibe to raise like 10 or $20 million on token play, so he can just retire in 2 years. If you look at the actual founders, they are locked in for 10, 15 years, and there is no guarantee, that you will become successful. But they are very emotionally and mentally involved into that shit they are building that will become and change the world. I mean, when the Uber came out, everyone was like betting like, hey, taxi market will be done. Taxi market was like a less than 1% of fraction what Uber has captured the market in current world. It just created the new market. People are using more Uber than taxi. You can say like 99% to 1% market cap. So I think the founders who are building token-based play, I think you should raise the money. Not saying like, okay, so what happens? Like for a very short, like founders comes to me and is like, hey, Sagar, I'm building a token play, but I'm happy to give you equity as well. Like, dude, you're just selling the same shit. You're just giving me the option to buy the equity. There is no value in that one. What you guys should do is like basically raise the money, but don't chase the token hype. Just have the meaningful product, and it's your own company. If you're selling at $20 million, if you make it work, it will go to the $500 million or $1 billion, and you can sell it later at the higher price. But what founders are chasing, like, hey, I'm gonna give you the token, which gives me this like easy liquidity play, and I can take the secondaries. And you can see in crypto, I mean, like 5, 6 project I can name it, like in last 6 months.
I'll take this moment to interrupt you and
Sure.
say that we're at the European Blockchain Convention, where I will make the claim that if there's no token, then what's the point of a blockchain company?
I think, as I said, I'm wearing the channeling token socks.
Wearing socks
yeah, I
is
love the
not
token
the
model.
same
No,
thing
it's like
as investing in tokens,
okay, so
regardless how cool they are, my man.
you have to let me answer then now. Okay, have a token, right? But it should have some meaningful use case. Otherwise, Sven was telling like owning the fart coin also makes sense, right? What's the intrinsic value you are selling to the crowd, right? Having a token. I'm not against the token. Do it token. But what's the value behind the token? What it can create?
You're
Can I make
either
money?
for the token or you're against the token.
I'm just saying like build the product which people like to use it and they should pay it, and then it represents the value into token like stocks.
And I fully agree with that. That's why at the end of the day, everyone who comes to us and says, you want a token right now, I'm like, no, I mean, I'm giving you maybe the possibility of in the future, if we have the product market fit that makes sense for us to have a token for whatever reason, then we will have it. That's the whole point of the token warrants.
These are equity socks, okay? These are Bitpanda
No,
equity
Bitpanda has
socks.
token,
Why
by the
we
way.
are not token stocks?
I think Sven, you're a token, right? Bitpanda has a token, no?
Oh yeah, well, Bitpanda has a token. Thank you for asking the Bitcoin Maxi that question. But I'm not part of the panel, so I don't have to answer that. That's very good. But talking about and I really like the interruption, by the way. Let's go over.
Do you?
What was that?
I said, do you?
Do I what?
Like the
Oh,
interruption.
I like interruptions. I do like interruptions. Tell me about red flags, Lex. What are the red flags in projects, token or not token, that you have encountered in your career, and how have you dealt with them?
Yeah, so I'd say my number one red flag would be crime. Don't like that at all. Not a fan of crime.
You mean in the background of the founders? Something like...
No, like active crime in the project.
But how do you know that it's active crime? Generally, that
Usually
comes
it's
after.
pretty straightforward to see. So I'm going to get there, okay? You gave an example of Uber, and Uber and a whole generation of Web 2 companies, financed largely by SoftBank, had this strategy called growth hacking and then blitzscaling. So growth hacking is like, our metrics are kind of shit, so we're just going to buy a bunch of fake metrics to make them look good, and we're going to spend like $2 million on that. And blitzscaling is, our metrics look shit, and we're going to buy some fake metrics, but we're going to spend $2 billion on it, right? So if you take an Uber and they pay you 10 bucks to take an Uber rather than you paying the Uber 10 bucks, that's blitzscaling. So kind of Web 2 started this. Web 3 has financialized it. And Web 3 is full of these traps. The traps being that people will say things like we're growth hacking, or we're incentivizing usage, but in fact, as a VC, and I'm sure those of us that do invest in tokens, you're constantly seeing projects that are bullshitting you, and so I'll meet like a founder who like started a company 6 months ago, and they're like, yeah, this is our company, we make tokenized sandwiches or whatever on the blockchain. And like, here's our Twitter account, and it's like 350,000 people, and it's like they're all bots, and they all say the same thing. So that's embarrassing for you, the token sandwich entrepreneur, because your metrics are fake. They're obviously fake. And it's amazing to me that people think they're not fake. But then you can take it kind of to the next level, and the next level is, okay, the Twitter account. Now we need fake users. Like, we have fake Twitter bots. Now we need some fake users. So I'm a deep-end project. My thing is tokenized light bulbs. We'll all have a light bulb, and then we'll have a network of light bulbs, and lights how the world goes around. So aren't you in favor of sun and the truth? It's called Apollo.io. TG in a month. Yeah, I know, it's pretty good. Anyway, so how many light bulbs do you have? Well, we've got 5 million nodes. I was like, what? How do you have 5 million nodes? Well, we just have all this organic demand. Okay, where are they? Well, 80% are in Malaysia, and 10% are in Vietnam, and another 10% in Ukraine. And like, you think I'm making a joke, but like, I have pitches when I ask people where their users are, and it's the same 5 million people who got really rich off of Axie Infinity that are yield farming deepens into oblivion, right? So if you are paying people to take your stuff for free, that's not a user. That's QA or marketing, So that's kind of red flag number 2, where the users are clearly fake, and like, you don't have the self-awareness to adjust your lying to be believable. Like, your lying is so egregious that you're just like, whatever. And then number 3 is crime. And this is the slippery slope. And crime is market manipulation. So the same people who do the step number 1 and do step number 2 are the people who in step number 3 say things like, we're going to get the best market makers, we're going to paint the chart like this project, we're going to make sure the token price goes up, only this much of this is float, and so because of that, we can control price and dribble it out and this and that and that. And you would be, I am profoundly sort of like affected with disappointment at how many people who are dressed like the people you see on the stage, who you think are serious and are sitting in, like, I'm in London now, so in fancy Mayfair offices in a $15 billion private equity firm, with a straight face will say to me, we are going to paint the chart. Like, I am just profoundly surprised. And so I think as a red flag, and I want to say something entertaining and kind of real to people, otherwise it's all, why are you here? Like, just don't do it, man. Like, don't do the crime, Just like build a thing instead of trying to shortcut your way to the outcome.
Thanks, Lex, for proving my point. He said everything what I was trying to tell you. Thank you.
Well, Christopher.
I would prefer that that clap be slower, but it's fine. It's fine.
I think I would like to add the red flag thing is like there's like so many founders are. I think its playbook is pretty simple. You don't need to rocket science or reinvent the thing. The startup game is pretty simple. If you are not able to fundraise, then bootstrap it, right? You should be very emotionally involved with what you're building. Otherwise, you're just looking for some cash, And if people are not investing in you in early stage, that means it's a good sign. You can sell your company at later stage at higher price. But are you willing to do that shit? It's not easy. You have to put 18 hours of work there. And as we are in Europe, and I come from Munich, I lived there for almost 14 years. I speak the language, so I tell you, like, the founder raised pre-seed and seed round, $1 million, $1.5 million. He takes the portrait photo from the next door photographer shop and then start putting on LinkedIn post, like, hey, I raised just $1.5 million seed round, a long thread on like how to fundraise. No, shut the fuck up. Sorry to say that. Your job is to not to post the LinkedIn threads. You just heads down and build the shit, because you got the money not to just post and start giving the wisdom, but like build the actual product. These are the like instant red flag for me. Like if sometimes like founders are constantly posting on Twitter and LinkedIn, you're not KOL, you're just founder. And then second thing is like, if you are constantly telling the people like, hey, like what Lex has said, like bots. I think last year was like a very mainstream thing. Like, hey, we have like 300,000 Twitter followers. I have like 50 KOLs, and they all are posting every day. That was actually the thing. Most of the L1s raised like $500 million based on that one. And as like say, like they're like, who are the users? Like some guys are running like $50 or $100, 100 people, like what industrialization of airdrop or like creating the fake trading volume. So I think that are like a couple of major flags where like I think you should try to stay away. And like third thing is like don't go to jail. That's a very important thing.
And may I just add, you can clap. May I just add, so, thank you. People like that I speak.
It is so awkward up here with this completely nonsensical clapping. I mean, it's really
You started
uncomfortable
this,
for me.
but
Yeah,
it's fine.
It's just I want to share how disappointing it feels.
It's fine. We're here for you. But what I was going to say is red flags from a founder's perspective of the VCs you do want to deal with.
That's an interesting one.
It's an
Listen
interesting
up,
one. Let me
guys.
turn it around. It's not about you guys. But I've had many VCs coming to me asking me, how many Twitter followers do I have? That's the first question on Telegram. Then I'm like, I don't obviously want to deal with you because what you're obsessed is a token, you want them to dump on everyone at TGE, and you're just going to be pushing me to do a TGE if I ever offer a token. So I think that's the main one.
Okay, got it. Maybe Christopher, do you believe that, and specifically when we're talking about like fraudulent activity and stuff like that, do you believe that stuff like the MiCA regulation that now is in place in Europe will do any good, any bad? What is your take on the US like moving? Can you shed some light on your opinion regarding regulation maybe safeguarding misbehavior or crime?
I guess it's kind of like a delicate balance that you need to strike with regulation. So obviously, like I said, we had like a playground until now. And so it's nice to have some guidelines to kind of keep the scammers out and stuff like that. But at the same time, this whole industry was built on the kind of idea of decentralization. And if you kind of crack down the whip too hard, then it kind of defeats the whole purpose. Unfortunately, I feel like, so I'm not saying anything bad about MiCA because we actually incubated one of the first regulated Euro-backed stablecoins called EURO-E that just got acquired by Paxos. So we're very familiar with like MiCA regulation. Unfortunately, the people that are actually writing those laws like aren't very crypto native. So a lot of the stuff actually from the DeFi side and stuff goes under the radar anyway. So it's kind of, I don't know, if to answer the question, if you had to compare like the US to Europe, I think the US is a bit more sophisticated because they actually cracked on a lot of like protocols and stuff like that. But MiCA, there's still a lot of holes in my opinion. And yeah, I don't know. I don't know what the right answer is here, but like you have to kind of strike a delicate balance between the two.
Maybe good first step into the good first step, but still not there. Any?
I mean, Sven, you are from Germany as well, right?
Yeah.
So how many of you know about Ethereum as a testnet called Goerli network? there is a testnet on, if you use the MetaMask, you can see that like Ethereum is the testnet Goldly network. Does anyone know? Yeah, 1, 2, 3, 4, 5. Yeah. So you know the name comes from Goldlitzer Park. It's a park in Berlin, very famous park. The reason why I'm telling is like you need a sort of like regulatory framework, because I think if you go 10 years back, Germany was front leading the blockchain innovation and startups. Like so, Ethereum, the guys who was first block was mined in Germany. Gnosis, Gelato, Li-Fi, 1inch, Polkadot. They're like dozens of startups were born in Germany, but not to having the like clear regulatory framework. These all founders has to go to either Dubai or they move to Zug. So I think, of course, I fully agree with you, Chris, that there are lots of loopholes, but I think there's like a constantly back and forth feedback, and you can always make the regulation much more sophisticated. And that's not the crypto thing now, like with the Mika. I think back in days when e-commerce was getting built, the people who write the policy, they had no idea about internet. They had no idea about e-commerce. So I think that same thing is happening now. I think they are just bureaucrats. They are doing their own thing. Of course, they don't want to kill the innovation, but they are working in some certain boundaries, you know. So I think Mika is now, there is like a clear framework for 27, 28 countries, so you can at least build on that framework. But of course, you can always see like, okay, you have not that freedom and that freedom to do that thing. But I think you can go back and forth with the regulators, and you can at least temper it. But it's not like debanking all the crypto guys like what was happening in last 4 or 5 years in US, you know. So I think I would put that as in a positive way that Mika has come out and Europe has now one single body regulatory where you can at least foresee the future, like how to build the crypto-based companies, you know, like blockchain-based companies on the, like by using like in that framework. So I think I see it as a positive thing.
Yeah, would agree. Coming already to kind of like the close of this panel already, because we need to make up some time so you can catch your flight. So my question would be, is there any like specific sector still in the blockchain ecosystem where you guys say this is specifically overhyped, underhyped? We had a lot of talks about, and I mean, I'm in the space for a decade. I'm hearing real world tokenization for a long time. What are these things that you constantly hear that have not worked, will never work, and we should just go over with? And what is the stuff that you find especially interesting, like sector-wise? Is that something that where you could differentiate? Is that something?
Sure. Things I hate. Let's do it.
Yeah, love it.
No, I think it's actually really humbling to think about, like, as an investor, like the patterns where you're like, okay, these things will never work, and then you have Polymarket at 9 billion. You know, like, no way, like, zero chance prediction markets would work because Gnosis and Augur, with all of the funding they've received, accomplished absolutely nothing to build prediction markets. And that was a strong bias I had, and here we are. You know, with ICE, a company that generally knows things about exchanges, putting 2 billion to work into a betting market on Polygon. I mean, it's really quite wild. So I think these sort of biases of things that you hate are actually really informative as your blind spots. So my blind spots would be, number one, I think identity is a dead end. I have not seen, there's been every single version of decentralized, verifiable, this and that identity. Nobody cares, consumers won't pay for it, a completely dead category, unless it's a KYC platform, right? So a company will pay infinite amount of money to make sure that its clients are real. Client users will never pay for identity. And so I think that's one hole that we keep falling into crypto. SocialFi and GameFi is another place where I think we keep tripping over because crypto people are like, we like that, and we're going to do that, but better because we're going to put tokens in it. And in fact, it's just you're taking something nice and turning it into a pyramid scheme, you know? And then like people are like, this is a pyramid scheme. I lost all my money. And it's like, why didn't Frentech work?
Are you talking about the pension scheme now, or is that still,
Yeah,
that's not tokenized
I'm
yet?
all about schemes. So in terms of things I like, I'm still quite, I guess, religious about the idea of the AI economy using crypto as the financial system underneath. I really hope that happens. I hope that it's not just Stripe, but that some of us get a chance at doing it. I'm also still bullish on Deepin. I think the tokenomics of the projects in the sort of last generation have not been very good, but we're an investor in a protocol called Peak, and like the fundamentals of what they're doing is super cool. 5 million devices, like robots on chain, buying secondary equity from like Figure and Apptronic and Unitree. So I do hope that crypto has a place in supporting the growth of those industries.
Perfect.
Yeah.
The VC world. One sentence, 2026. What will be happening 2026 to the VC world and crypto in one sentence?
Sven, I'm talking in the same panel since last 3 years, like VC Bay 2023, 24, 25. This is my fourth panel on 26. Nothing will change, guys. I mean, the
Nothing
things
will
takes
change.
time.
Yeah,
You know,
so-
it will be the same.
Well, I mean,
But I would like to add on Lex's point, like what will be, like what are the like highly inflated points are like digital asset treasuries. The debts are like super highly speculative now, you know, like, I mean, it can do net good for the long term for our industry, but I think the way there's every random coins are doing the DATs, I think that will be like, for me, like a next 3AC or FTX kind of thing. And second thing, I think stable coins are a bit of, I mean, stable coin will be like trillions of dollars net worth for sure in 10 years. But I think the amount of stablecoin we have now is like, it reminds me of the ICO era of 2017, you know, like crazy.
So two things. Thing number one, on the VC side, from a project perspective, as I said before, I'm seeing more competition from traditional VCs, which is quite exciting for a project like us. So I feel like from next year and actually from now, CryptoNetics will need to compete with better, with investors that have been around for longer and that have more money than them. So they'll need to reinvent themselves, some of them. And the second one is in terms of Dean's tokenization. I heard on the previous panel that they were saying that maybe in 10 years' time, we're going to tokenize everything. I'm not into tokenization of everything, but I do strongly believe that tokenization, especially of certain financial products, is something that is now going very slowly because you need to reinvent certain ways of how to tokenize, and it's just going to explode at the moment when you least expect it.
Perfect. Christopher, if you don't have anything to add, and yeah, we'll close this panel right on time so that we can all make it to the airport. Any good last words that you want to add to that?
Me?
2026 VC market?
This might be a bit controversial, especially with the
Oh,
panel
no,
up
not
here.
for the last question. Man, that was a question like 20 minutes ago.
We still have time, like 3.5 minutes. Like
Oh,
I
yeah,
said,
there we go. Yeah, we got bumped up.
I'll be short.
You're allowed to hear us. I think it's getting more crazy, yeah?
In 2026, I actually hope that their VC funds don't exist anymore. Like, I'm a bit more on the opposite angle. Like, I think if you actually want to raise funds, do like an Echo round or a Legion round or something like that. Because I don't think, like, unless the VC has some sort of like actually real value add, I guess like we do engineering resources. So if you want us on your cap table, we can help with that. But half of our portfolio has actually been like liquid investments. So like companies that have already listed a token, and we help in the exact same way as like a private round like investment does. So I'm on the opposite side of the camp. Like I actually think every crypto project should do a token, and I don't really believe in utility tokens because I think it's a way to actually just get around the SEC of being a security. But yeah, that's kind of
Okay, so like, what a way to end a panel, you know? Asking one panelist, so what will be in 2026, saying everything will stay the same, and then you have the next guy saying VC dead. So,
But he said specifically like crypto VCs will be dead.
absolutely, absolutely. So thank you everybody for listening. Wish you a very nice evening. Next up is the startup battles. Thank you all for participating. I do have Bitpanda socks for you as well, and I wish you all a very nice evening.
Thank you, Sven.
Thanks.
Thank you.